So the last question is E2.7. Presented below are a number of operational guidelines and practices that have developed over time. So select the assumption, principle, or constraint that most appropriately justifies these procedures and practices. Do not use qualitative characteristics, so use only assumption, principle, or constraint. So A, fair value changes are not recognized in the accounting records. Okay, so this is the historical cost principle. So remember, if you use historical cost principle, you cannot change the purchase price anymore. Yeah, so it is what it is according to the first time you record it with the purchase price. And then B, accounts receivable are recorded for sales or account rather than waiting until cash is received. Yeah, so this is obviously the accrual basis assumption. So remember, for accrual basis, we need to recognize the revenue or income when we have done the sales process. Yeah, so we won't wait until the cash is received. And then C, financial information is presented so that investors will not be misled. So that is full disclosure principle. So remember, all of the important or significant events must be presented to the investor so that the investor will know and they will take the correct actions, yeah, towards the company. And then D, intangible assets are capitalized and amortized over periods benefited. Yeah, so that is expense recognition principle. Yeah, so remember the principle is let the expense follow the revenue. So company is already benefited with the intangible asset such as that trade name, patent, copyright. Okay, so all of those things will help the company to generate revenues so that the intangible asset must be amortized or it's like the depreciation. Yeah, so it will become an expense. And then E, brokerage companies use fair value for purposes of valuing financial securities. Okay, so that is fair value principle. Yeah, because financial securities is very liquid asset. Yeah, so every working day their prices will change. So we cannot use historical principle. Yeah, it must be based on the fair value or the market price. And then F, each enterprise is kept as a unit distinct from its owner or owners. Yeah, so this is obviously the economic entity assumption. Yeah, so remember, the owners or the owners of a company is or are separated from the company. Yeah, so they cannot do as what they want. Yeah, because the company itself legally is separated from the owner. And then G, all significant post-statement of financial position events are reported. Okay, so that is full disclosure principle again. Yeah, because it is significant events. Okay, it must be reported to the investor. So again, the investor will not be misled in taking decisions. And then H, revenue is recorded at point of sale. So that is revenue recognition principle. So if we have done our obligation, okay, we must record it as a revenue. Yeah. And then I, all important aspects of bond indentures are presented in financial statements. Okay, so this is once again a full disclosure principle practices. Yeah, so important things, remember, or significant things, it must be presented. Yeah. And then J, rationale for accrual accounting or the reason, okay, behind the accrual accounting. It is revenue and expense recognition principle. So remember, all of the revenue events and expense events, it must be recorded at the time when the events are happened. So not at the time when the cash is received or paid. And then K, the use of consolidated statements is justified. Yeah, so that is economic entity assumption. So what is consolidated statements? It is the financial statements uh, that is comprised of the parent and subsidiary financial statements. So for example, when a company purchase another company, the company itself will become the parent, and the company that is purchased by the parent is called a subsidiary. So at the end of the year, their financial statements must be combined. Yeah, so it's consolidated. Yeah, it must be combined, become a consolidated financial statements. Yeah, so this is as if from the beginning the parent and the subsidiary is one company. Yeah, so that's why it's economic entity assumption. And then L, reporting must be done at defined time intervals. So that is periodicity assumption. Yeah, so usually we will report it per month, per year, per quarter, or semester. And then M, an allowance for doubtful accounts is established. Yeah, so that is expense recognition principle. So the reason why we establish allowance for doubtful accounts or provision for doubtful debts, it is because of the sales. Yeah, so remember all of the credit sales, uh, it is not necessary that we can collect all of it. There will be always bad debt expense. Yeah, so when we establish allowance for doubtful accounts, we will record bad debt expense. Yeah, so remember, let the expense follow the revenue. And then and all payments out of petty cash are charged to miscellaneous expense. So petty cash is the cash that is provided by the company to pay small expenses, yeah, like the stationery or the petrol. Okay, so because it is very small in amount, they will be charged to miscellaneous expense. Okay, so that is the materiality constraint. Yeah, so why it is materiality? Because of the petty cash significant is very small in amount, so therefore it is not material. Yeah, so that's why they will charge it to miscellaneous expense, because it's not material. And then O, goodwill is recorded only at the time of purchase, so that is historical cost principle. Yeah, because when we acquire goodwill, we will only record it at the purchase price. So that's why historical cost principle. And then P, cash received and paid is not basis used to recognize revenue and expenses. Again, this is accrual basis assumption. Yeah, so it fits the definition of accrual basis. And then Q, a company charges its sales commission cost to expense. That is again expense recognition principle. So we need to pay the sales commission to our employee because of they succeed to sell something. Yeah, so we will gain the sales or the revenue. So that's why this sales commission happen because of the sales. Yeah, so again the principle is let the expense follow the revenue.